After 18 years of investing, I had 3 rental properties and pretty much nothing else, which is rubbish. But in the last 6 years, as an investor, I've ended up with 6 rental properties, a 6-figure stock portfolio, and a 6-figure crypto portfolio, all because of 2 words: financial education. Today, I'm going to give you a simple plan to build wealth and potentially retire early. Then I'll tell you exactly how I've turned things around. But first, I'm going to give you a personal story of why investing into assets is hugely important. Why investing is so important. I invested £500 a month into a stocks and shares ISA at 18 for 6 months, but stopped and spent all of my money on a lad's holiday to Ibiza. Huge mistake. This was down to a lack of financial education. Let's say I was taught about things like compound interest at school. I know for a fact I would have invested from 18 to now, so that's a full 24 years. If I got average returns of 10%, and that figure is based on over 100 years of data, investing £500 per month for 24 years would have meant I'd be sat on £594,000. And looking at that huge amount, 450,000 is made up of interest earned. This is the power of consistent investing in index funds, the power of compound interest. Now, if you are serious about financial freedom or early retirement, hit subscribe so we can build wealth together. The 5-step plan to retire early. This is a simple process I talk about all the time because I'm sick of seeing people struggling, especially in retirement. And I want to help as many people as possible with my investing experience. Step 1, money mindset. Before you touch an investment, before you open an ISA, before you even think about the stock market, you have to fix what's upstairs. If you don't fix your money mindset, it doesn't matter how much you earn. You'll always feel broke. Between 2008 and 2018, I lived through what I now call my negative decade. I feared failure. I was anxious about money. I made emotional decisions time and time again. I made mistake after mistake. I was stressed out. The list, unfortunately, goes on and on. Everything changed in 2019, not because I earned more, but because I started thinking differently about money. As Morgan Housel says in his excellent book, The Psychology of Money, money's greatest intrinsic value is its ability to give you control over your time. That's what this is really about. Time freedom, not cars, not watches, not flexing online. It's about waking up when you want, working if you want, and spending your time with people who you love. So how do you build that mindset? Change your language. Stop saying, I can't afford it. Start thinking, how can I afford it? Think strategically. Every pound you earn is a chess piece. Give it a job. Or as the saying goes, look after the pennies and the pounds look after themselves. Reprogram your beliefs. The things you heard growing up, money doesn't grow on trees, or people with money are greedy, those stories shape your financial future. Stay neutral. Money isn't emotional. It's not evil. It's just a tool. The calmer you are, the better you invest. Mindset isn't fluff. It's the foundation. And if you master it, everything else gets easier. It follows on. Step 2, personal finance. Now that your mindset's right, it's time to get practical because income means nothing if you don't keep it. I've met hundreds of high earners in my career, contractors, business owners, executives, and so many of them reach their 50s or 60s with nothing to show for it. They weren't building wealth, they were funding a lifestyle. Here's what I learned. If you can't manage £1,000, you won't manage £10,000. So here's how to take control. 1, know your numbers. What's your income after tax? What's your spending? What's your net worth? Awareness is step 1. 2, kill high interest debt. If you're paying 20% on a credit card, forget about investing. Paying that off is a guaranteed 20% return. 3, build a cash buffer. 3 to 6 months of expenses in cash untouched. It buys you peace and stops you from making emotional investment decisions. 4, reduce expenses. Track your spending, cancel subscriptions, cook more, etc., etc. Remember, this isn't deprivation, it's buying your freedom. 5, increase your income, but avoid lifestyle creep. Every pay rise shouldn't mean a new car or holiday. Lock in a percentage of income for investing, 10%, 20%, even 30%. This is where wealth building really kicks in because once your finances are under control, your investments are no longer a rescue plan. They're an accelerant. As always, nothing in this video should be taken as financial advice, and the full disclaimer can be found below in the description. Step 3, financial literacy. Now that you've built a foundation, let's talk about the part schools forgot to teach us. Financial literacy. I used to be in the overdraft every single month. I spent my negative decade worrying about money and whinging and moaning to my poor wife. Since 2019, I've built 6 figures in 3 different asset classes. Not because I'm smarter, but because I finally learned how money actually works. Here's the truth. Money isn't moral, emotional, or magical. It's just a tool, a store of value, a medium of exchange, and a unit of account. When you understand that, you stop chasing quick, easy money, quick, easy wins, and start playing the long game. Here are the basics. Budget properly. Follow the UK 50-30-20 rule or similar. 50% needs, 30% wants, 20% future. Invest in saving, debt paying off. Build an emergency fund. Again, 3 to 6 months of expenses in a high interest savings account like Marcus, Monzo, or Chase. Understand interest. It's either working for you or against you. 10,000 invested at 10% equals 22,000 in 10 years. 3,000 credit card debt at 24% equals 15 years of pain. Learn the difference between good debt and bad debt. Good debt builds assets, like a mortgage on a rental property. Bad debt funds liabilities, like a holiday on a credit card. And finally, understand how to invest in the UK. With stocks and shares ISAs, you can invest up to 20k per year tax-free. SIPs, you can invest up to 60k with tax relief. Lifetime ISAs, you get a 25% bonus for your first home or retirement. Financial literacy is the bridge between knowing what to do and actually doing it. Step 4, mistakes to avoid. Let's be honest, most of us learn the hard way. I certainly did. Over 24 years, I've made every investment mistake you can think of, and they cost me over 146k, if not more. So learn from some of my painful mistakes. Don't invest with emotion. Your biggest risk isn't the market, it's your reactions. Fear, greed, and excitement ruin portfolios. Avoid quick and easy money. The only thing that gets rich quick is the person selling the scheme. Play the long game. Watch out for FOMO. When everyone's bragging about crypto gains or hot stocks, remember, real investors stay calm. There's always another opportunity. Don't ignore personal finance. You can't invest properly if your personal finances are chaos. Fix it first. Don't take losses personally. Failure is part of the process, the journey. What matters is staying in the game. Remember this, you are not your portfolio. You're an investor in progress. And if you can control your emotions, ignore hype, and stick to the plan, you'll outperform 90% of people who invest, if not more. Step 5, how to retire early with index funds. Now the best part, building wealth. Forget trading or guessing the next hot stock that your workmates are telling you about. The real path to early retirement is simple. Own the world, as Andrew Craig says in his excellent book, How to Own the World. Index investing means buying tiny slices of thousands of companies around the globe. Apple, Toyota, Nvidia, Robinhood, Tesla, all in one fund. Here's how you do it. Pick a platform. In the UK, Vanguard, Hargreaves and Lansdown, AJ Bell or Free Trade. Compare fees. Every 0.1% matters. Choose your tax wrapper. Stocks and shares ISA, tax-free, flexible. SIP, tax relief, but locked until your late 50s. Pick your fund. Vanguard FTSE Global All Cap Index Fund, over 7,000 companies worldwide. Vanguard Life Strategy 100%, Automatic Global Diversification, Fidelity World Index Fund, another brilliant option. And for more options, see below for a recent video. Automate your investing. Set up a direct debit every single month. £100, £250, £500, whatever you can afford. That's called pound cost averaging. It smooths out the market's ups and downs. Set and forget. Don't check daily. Don't panic when markets dip. Just keep buying every single month for 10, 20 or even 30 years. Let's do some quick maths. At 10% annual returns, £500 per month is 1.1 million. In 30 years, £1,000 a month is 1 million in 26 years. £1,500 a month, 1 million in 22 years. That's how you invest your way to £1 million. That's the power of compound interest. Your money earning money while you sleep. And remember, retirement isn't an age, it's a number. When your investments cover your annual expenses, you're free. If you spend £30,000 per year, you need roughly 750k invested based on the 4% rule. If you want to know more about the 4% rule, again, see below for a recent video. That's your financial independence number. Let's recap the 5-step plan to retire early. 1. Fix your money mindset. 2. Master your personal finances. 3. Learn financial literacy. 4. Avoid common mistakes. 5. Invest consistently in index funds. If this type of info resonates, have a look at my latest playlists, How to Retire Early and Index Investing for Beginners. I'll leave the links below. How I've turned things around. Long story short, financial education. But I'll tell you a little bit on how I did it. In 2018, I got into much needed personal development after being negative about money for far too long. This led to setting goals and reading books on investing and mindset. I started my little comeback with property. I overpaid my 3 rentals aggressively. I worked abroad in shitholes for long periods and was able to add another 3 rentals to my little portfolio. I started investing in index funds for me, my wife, and our 2 daughters in 2019. This is 100% my favourite way to invest, mainly because it's stress-free. Since late 2023, I've turned 15k into over 100k inside my SIP by investing into stocks, tech stocks like MicroStrategy, Robinhood, Tesla and others. Not because I'm an expert stock picker, but because I'm investing in the future. I'm very bullish on technology stocks in general and crypto. I've also built a 6-figure portfolio in crypto by immersing myself in crypto and blockchain technology. This to me is a huge improvement on my first 18 years as an investor. And if I can turn things around, trust me, anyone can. Summary. In this video, I've tried to demonstrate what's possible with financial education and investing into assets. Literally anything is possible. I believe that financial education leads to financial literacy, and financial literacy leads to financial freedom. Spend some time thinking about what financial freedom would mean to you, and I'm very confident you'll find a way to invest into assets. And if you want help and support to get started, type yes below and you can join my free investing community. There you're getting around hundreds of other investors, like-minded investors, and you're getting one-to-one support. Basically, I'll do my very best to help you with my 24 years of investing experience.